Hello, traders. It's E from MarketWizards.com and eMiniWizard.com. It's about 2:30 on Friday, the last day of May 2019. Reminding traders to use risk capital you can afford to lose. Quick reminder that we've got a live trading room starting next week. Please sign up well in advance if you'd like to have access Sunday night. If not, you'll be processed on Monday. Honeymoon Special is basically the live trading room along with the e-widget. So if that's your selection, please click on that opportunity. All right, trying to show a little bit of the versatility of the e-widget. We talked in our room yesterday. One of our traders likes oil. And we talked about that break back in that 57 area, and we said that opened the door certainly to come down and test the 56 and a quarter. He was thinking perhaps in the 53s, and we said, well, that's certainly possible. Let's see what happens. Someone asked me if I trade crude oil. I do not, but I wanted to show the versatility of the widget and how it's somewhat easy to analyze and look for things. So the first thing that we had suggested was you got to get by this post right here where this blue line is. And then obviously you're going to have to come down and you check out the next support. And we felt the bottom of the pipe, which is one revolution above or below the middle, targeted 53.62. So that's been our focus, was see if the market could get there. And then obviously we're testing right here, this little doji bar, and then the next support is going to be back here in the 52s. So this is a good example of using the system to try to understand relationships and how visibly we can see where areas of prior support have failed and become resistance back here at that 60 area. And that was a great trade here from the 60 a third time through, and then the pop to the high, and then obviously come on back and retest for 56. So this is a great trade for anybody who's got crude oil. Someone asked if I was short crude oil. I said, no, it's hard enough to be a master of one vehicle, let alone two or three or four. I'm pretty well focused on the E-mini, but this system does work for anything you want to use. Right now we're looking at the angels and demons, and we felt that this 66 would be resistance, and then see if we could get by 56 or not. On this last swing in here, and obviously below that, third time through trade at the 56, looking to test the 54 angel, 54.75, and then obviously good fortune to get below that. 5 RTH chart, you just cannot do better than what we saw here. Pumping into the blue line the second time. I said this might be a descending triangle. We don't know. If we can bust that 56 and a quarter, third time through, then we've got a shot to test the lows again and even lower. But primary idea was to come back in and test support lows. And right now at 53.75, we're testing that original overlight low and stops down anybody that's short. So we held this 65. We thought 66 area might be resistance. Don't forget that was that original 66 low. And then we got back above it. But then once you get underneath it, you've got to beat it all over again. And that trade works to test the third time through trade. We thought this would be very important today. And then obviously got to get through that 53.75 low. And if you do, then the 52s, 51s are again in play. So from the length of this swing right now, anybody that is keeping an eye on time and keeping an eye on obviously making sure you don't get caught, all stops should be down at this point. And good fortune, good luck will be obviously taking out the low, and then a couple of targets we have lower. But for now, anybody that's had a great day should make sure they are paid. We call that PFS, paid for sure. And here's our weekly chart. So theoretically, this is how we started the day, with this as our support. This has then the fighting box and then resistance box. And now, because of the movement, we have to slip one down here. Say this is certainly our fighting box. And then the resistance box is back here. And you can really see just how well this, let me put a mark there. You can just see how this retest held back in here. Beautiful, beautiful retest overnight. And we felt this morning that there could be another low, but the odds were terrible to try to short down here. So sometimes what happens is you'll get the push and then you'll get those targets later. And we call that the long way home trade. Should be a double bottom test within a point or so either side of the low. Sure, you're paid if you're in there. And we've been looking at relationships. We had a pretty good idea that this 78 was going to be our resistance, and that has worked out pretty well. We used that last night, said let's use 78 as our resistance, and that's turned out to be a huge winner for anybody that played, took advantage of the Mexican news. We really like the 30-minute chart today. We couple this with some of the lower time frames, but you want to look at a big boy like this. It really helps you to see where potential resistance might come in, and you can see where it started way back here. This has been an unbelievable run for the shorts, and those traders who have made fun of the shorts for quite a while, right now aren't quite sure what to say, but certainly we're in a correction. I am still not convinced we're in a bear market, but I do believe we are in a correction for sure, and rightfully so. And here's the NQ 120-minute chart. You can certainly see how this has also followed the same pattern and bounced and rejected. We love those trades, retests we call them. Here's a third time through trade over here. And that's resistance. So we've had a pretty good month, and the indexes have all been suggesting the same thing: lower highs, lower lows, lower highs, lower lows. Till that pattern changes, we are in a correction. And typically we will use a circle like this to help teach, to show the box that we are currently resolving. And then we can look to the left side and we can see where we believe the current fight is and then where the next one. So if this 51 can hold, then obviously it's got to get by that 56 to try to get to the 61 and a quarter. And that's called step by step. Doesn't matter what size, we're using the same ideas and we're trying to teach that idea through any number of vehicles and through any number of size of charts. And our predictive model. You can see how we're off the charts here. This is as low as we go on the current frame. So if we want lower numbers, we have to reframe this whole thing. And my feeling was that we would not go by much underneath this today, so we just left it. Got other means to tell where we might be going. But this reminds me also that we are really very much extended for the targets. With stocks, the 73.5 would be the normal support area. With the E-mini, we find you need the extremes, and that's 1 or 2 levels below. So theoretically, we are at an extreme, and we know that back here, that big, huge pivot that we have talked about before, 28.12.5, is still the resistance pivot. Once we broke that and we broke down, then it was lights out. A very good example of a corrective move once you lose a big pivot like that. And this is a 10-minute Globex that we were looking at earlier. This is a shorter time frame, and we wanted to note just how we were not able to get back up above it, note the blue line, and then that pushes it down. Want to keep an eye on this, a shorter time frame. Want to keep an eye on the rain line coming down, and obviously over and under tells us we're trying to consolidate once we start to do over and under the blue line. So for now, typically this chart is still our primary chart for faster times. And if you want, you can use 15s or 5s or whatever, but I chose this one. It just seemed to be a good fit. And backed up by that 30. And here's our driver. Here's our, this is the yearly chart. And you can see how we've been able to follow this downtrend, and we've been making lower highs and lower lows. Kind of broke a trend line that I had looked at here, and we've really taken a pretty good whack from that 30 area back down into this next low, which is that 65.25 target. And then obviously below that, and so we already know where our big support areas are going to be, and obviously first things first, so you got to break this line right here and this low in that 26 area that we talked about earlier. So first things first, got to break 52s before you can get down here, and that's step by step. And we try to use the same type of analysis through all of the different time frames. Just makes it more consistent and more easy to understand. And for those of you looking at things like VWAP and order flow, we can take a look at ideas like this. Note I put my line on here to remind me of that 65.25. And we can understand the bounces from overdone to oversold and back again. And our magnet is 60.5 as well. So our system picked up on this 60.5. I'm starting to like this. It's taken me a long time to quite understand it, but there are things I see similarities with this and with obviously what our work is. Anybody long side should be paid by obviously that 60.5 to 62. Still got a battle going on for the close. We noted this morning that we had pretty good tick charts, ticks down there in the minus 1,000 area, and that is something that we like to note. Whenever we get a big extreme, we think it's time for some kind of a change of pace, and we use it for divergence, as probably most traders do. Here's another slightly different chart. This one's actually measuring from the low that we had in December to the high. And what we're tracking here is that relationship. So right now we're in this box. So we're looking at relationships from a swing perspective, not just the yearly. So this one told us when we were back here at that 81 area, 2880, 82, that this was an area to be careful of, because then it might target the 80, which we found this first bounce was a beauty from that 80 all the way back up, and then we've come right back through it and taken that out, and now we're in the next box. So the creativity of your system depends on you. It has nothing to do with the tools. Tools are just like a golf club. You get to swing them, and you can't blame the clubs. It's really the user that has to take responsibility for using the tools correctly. And we're trying to provide the tools. You need some capital. You need some courage. And if you want to hang out with a group of traders who really have their act together, then I'd suggest you take a look at what we're doing. We've got some traders here in this room that, make me feel like I'm the dumbest one in the room. So if you've got some time and a couple of bucks, come on in and take a look and see if we can help you pick up your game. This is E from MarketWizards.com and eMiniWizard.com saying have a wonderful weekend, and thanks for taking a listen to what we're looking at.